You're sat like we're in a U.S. Senate testimony.
Yes, I'm quite familiar with that setting.
Yeah.
But I'm chill here.
Yeah, you're in good company.
Exactly.
Welcome.
Thank you.
Thank you for joining us.
Thanks for having me.
We've wanted to talk to you for a while, but we have this relentless desire to do all interviews in person because we always think it's a better conversation.
Totally.
So we've waited for this opportunity to come and see you, but we're really interested in what you're doing. Obviously, we met the other night, and it was great to hear a little bit, but we kind of want to get into more of that. But actually, I'm really intrigued, almost more than anyone we speak to, about why you're into Bitcoin, just because you've had such a fascinating career. You've worked with some of the most successful people in the world. You've been hugely successful yourself. You worked at some huge companies who have touch points in money. So we're going to get into some of that, but I'll do a bad job of giving people a TLDR of your career. I could talk about what you did at Facebook, working on Messenger and the Libra projects. But do you want to go before that? Because you were actually involved in money quite early in your career, or payments, shall we say?
Sure. So I started my first company when I was 23 years old, had to drop out of college to figure out a way to make money for the family. And I was actually working at a bank previously. So my first job when I dropped out of college was in a bank, and that was not very stimulating. And I dropped out of the bank too. It was like dropped out of college and the bank, and started my first company when I was 23. And it was an alternative telco company in Switzerland, of all places. And we built it into one of the largest business-oriented telco providers in Switzerland, an ISP. And then I sold that company in 2000, started another company that then, after pivoting a number of times, ended up doing payments on top of mobile operators. So,
was that Zong?
Yeah, that was Zong.
Yeah.
And Zong had a platform that connected to about 300 mobile operators around the world for premium SMS that then became payments. And so I moved to Silicon Valley in early 2008 to start building that company at the time where social media gaming, like, Farmville and all of these things were starting to blow up, and they needed a frictionless payment system to enable people to buy a virtual cow on a virtual farm. When you're done with the 16 digits of your credit card, your CVV, and your expiration date, you're like, what am I doing? I'm buying a virtual cow on a virtual farm. So we removed a lot of friction by just enabling people to pay with their phone numbers. And that really took off. The company got acquired by PayPal. And then a little less than 6 months after I had joined the company, the then CEO of the company left to become the CEO of Yahoo. And I was like, okay, great. I'm going to go back to building a new company because that's what I do. And to my surprise, I was asked to go and lead the company, which I did for a few years, which was a whole experience. And then I was actually ready to go do something else because I was fed up a little bit with the role of just managing culture and people and not building product. I was ready to jump into a new company and start something new. And at that time, Mark Zuckerberg came to me and asked me to join to go build Messenger, which was kind of refreshing and away from regulated payments businesses for a bit. And so I did that for 4 years. And then when Messenger was really at its cruising altitude, as far as I'm concerned, I decided that I was still very, very, very frustrated with the state of payments.
Yep.
And that we still didn't have an open interoperable protocol for money on the internet, and that it was the right time to try to go build one. And with the distribution of Facebook reaching 3.5 billion people at the time every month, we felt it was the right place to get it started. And then the rest, we know the story of the rest, but it was worth a shot.
Yeah, well, we don't know it all. I mean, some of us do.
Yeah.
But so it feels like, one, you're a builder. You like to build things.
Yes.
And secondly, you've been kind of drawn back to payments multiple times in your career. Mm-hmm. Is there like a reason you're drawn to payments?
I don't know, actually. I feel like the reality of humans is that they typically care about health and their loved ones. And then right after that comes money. And for some people, it's before their loved ones. But for most people, it's in this order. And so it's important.
Yeah.
It's important. And it's how people measure their success. It's how we measure social stacking of people. It's for some people at least, it's how people put food on the table and feed their families. And there's a tremendous amount of injustice in how money moves and what quality of money people have access to. And so I feel quite passionate about it.
Yeah, and Facebook felt like, when we heard about Facebook developing Libra, and then I think it went through a few different names, Novi and DM,
Novi was the wallet.
Novi was the wallet, sorry. Yeah. But it felt like if Facebook did this, it felt like they had the opportunity, just of the reach, to do something really significant. And I think we've got a couple of questions on that. One, Danny really put to me is, would they or did they ever consider Bitcoin as a potential within Facebook?
Yeah, so I did.
Okay.
And I did early on, actually. And it was at a time where we were all crammed in a conference room trying to design this thing, knowing that we would get a lot of fire and a lot of pressure for this thing not to exist in the world because it would upset the apple cart in a pretty significant way.
Yeah.
And then at some point, I lost hope that we could design a thing that could actually resist the pressure from the establishment and various countries and or places that are dictatorships that are trying to prevent people to have access to free money or money that can travel freely. And so I had this moment where I was like, okay, the only thing that can actually withstand that kind of pressure is going to be Bitcoin. And I remember us being a little worried about several things. First of all, we were worried that there was no technology that could scale to reach billions of people with Bitcoin at the speed, the throughput, the cost that was required for a payment system to be successful. And we spent time looking at Lightning. I remember visiting Elizabeth and the team of Lightning Labs in San Francisco in early 2018, I think.
Yeah.
And it wasn't ready for prime time. It wouldn't be able to scale to billions of people. Arguably, if we had to scale Lightning today to billions of people, it would also be challenging in a number of different ways, and we can get to that. But at the time, it felt premature. And then the volatility of Bitcoin was a problem because a lot of people on the team were worried about, okay, if we expose billions of people to that kind of volatility, do we have a sense of responsibility about people who are going to lose a lot of money? And this is supposed to be a good medium of exchange. And so there were all kinds of reasons for us trying to build something net new because Bitcoin couldn't perform the function at the scale of billions of people that it needed to perform.
Was there any conversation around like the sort of moral implication of a company like Facebook controlling money for billions of people?
Yeah, a lot of them. And that's why we didn't. And devolving power is something that we spent a considerable amount of time thinking about. And that's why we created the Libra Association. That's why we brought in 28 members, I think, at the time, that were very substantial companies with a lot of financial means and distribution. That's why we tried to devolve not only direct power, but soft power of Facebook. The association had one member had one vote, so equal votes for everyone. The association was going to be the issuer of the stable asset, not Facebook. And so we tried to do a lot to overcompensate for the fact that we would have played a very important role distributing the Libra currency. But that wasn't enough. So in other terms, the fact that no algorithmic stablecoin can actually work or resist a run, and that you have a centralized reserve you then have a single throat to choke, so to speak. And that was the reason why Libra didn't see the light of day.
I thought Libra was going to be based on a basket of currencies.
Yeah, that was the starting point.
Okay.
That was very idealistic, actually.
Yeah.
When I think about it now, and the best part of this journey was actually the learning.
Yeah.
I think we all learned so much. And we had this idealistic view that the world needed a sort of new neutral unit of account. And that's the idea that we could create a unit of account that would combine the dollar for 50% or a little more, but then the euro, the Japanese yen, and all kinds of other stable currencies was anchored in this general idea that when you talk to Europeans, they don't like the fact that we're living in a dollarized economy, or anyone else outside of the U.S. And so we felt we can bring a neutral new unit of account that can become the neutral money of the internet. And it turns out that this thing already exists.
Yeah.
It's called Bitcoin.
Yeah.
It's not stable, and we can talk about how we work around that in the products we're building, but it is truly the only form of neutral money on the internet today. And that's why we're building on top of Bitcoin now, full circle.
Yeah. And I guess in some ways, because you obviously Facebook was pulled in front of the Senate committee, the banking committee, and you mentioned earlier that other governments were particularly resistant to it. In some ways, was Facebook trying to create a currency, an existential threat to Facebook itself, in that you create enemies you don't need to when you already have distribution of a platform doing certain things in most jurisdictions, that could actually present a risk to Facebook itself?
Yes,
Yeah.
but I feel like one of Mark's greatest strength is the fact that he always wants to push the boundaries, always wants to innovate, always wants to take risks. And I think that's why he's so successful and why the company is still so successful. But yes, there was a lot of pushback inside of the company. There was a lot of pushback outside of the company. We were sandwiched in the middle of a lot of pressure inside and outside while we were trying to get this thing off the ground.
It's kind of interesting, though, in that was what you were working on for how long? 4 years before?
Almost 4
Lightspark?
years, yeah, 3.5 years.
So that was kind of part of the roadway for you to building Lightspark.
Yeah, 100%.
Yeah.
Yeah, because I feel like you can theorize a lot about the experience we've had, but having lived it has changed my worldview and my appreciation in such a way that now I have this unshakable conviction that Bitcoin is the only form of neutral internet money there will ever be. And it's one thing saying it because you have laser shooting from your eyes. It's another coming to that conclusion after having tried for the right reasons, I believe for the right reasons, to build a technology that would scale to billions of people and that could provide a stable form of digital money that would travel on this new scalable payment system. And then you come to the realization that actually private companies issuing a new unit of account of anything that has that kind of distribution is problematic.
Yeah. And I'm guessing you didn't have to do this, right? I guess with your career history, you could have stayed at Facebook. There would have been other roles. You could have probably gone to any significant large company and had board seats or...
Yeah, sure.
But there was... did this create some... Like, were you compelled to do this?
Oh, yeah, very much so.
Yeah.
So, first of all, I had a deep sense of unfinished business.
Yeah.
And two is I was really frustrated by the fact that we had failed at doing what we wanted to do. But in that time frame, everyone else that tried failed as well.
Well, hold on. Is it really a failure when you've come to the realization that it shouldn't be a company doing this?
Yeah, I mean, yes and no. Maybe it's a good way to ask the question. I don't feel bad.
Yeah.
And, when I talk about failure, it's, if you never fail at things, you don't try enough, right? Or you don't try things that are hard enough. And so, do I feel do I feel bad that we failed for the reason that it probably wasn't the right thing in the first place? Maybe not, actually. That's a good way to ask the question. I think that the reality is we tried our best to decentralize this thing enough so that it could resist the test of time and the pressures applied to it. But the net of it is it wasn't. It just wasn't decentralized enough. It just, you could see who was running the thing, even though it was distributed amongst 28 companies. Each and every single one of these companies you could apply pressure to because they cared more about their business than they cared about this initiative.
And wouldn't there have been some kind of link between your Facebook account and your wallet in a way that is a little bit more centralized than, say, we have with wallets with Bitcoin now?
No, it would have been the same.
Okay.
The difference would have been that Facebook had a lot of distribution and other companies maybe didn't have as much distribution, but it was a fully open, interoperable blockchain with an open ability for people to build on top of it.
But it's just gone now.
Yeah. I mean, it's not gone. There are two companies that raised a lot of money building on that tech right now.
Yeah.
Aptos and Miston, and they're building on top of the Libra tech and the Move programming language and all of that. And, they're going after a different use case altogether. But so the tech and the teams and everything that we built is not completely lost in a way.
And so what turned you into a Bitcoiner? Because again, you great career. You could have been doing anything. You could have retired, in fairness. But when we had that drink the other night, I said to Danny when we left, I was like, "There's like something about David here that he's compelled to find a solution." And yes, look, you've raised money, you're building a company, you want it to be successful, return to your shareholders. I still think there's something more to it than that.
Oh yeah, for sure. No, this is my life's pursuit, and I've made the conscious decision. By the way, it's such a great moment in life when you know exactly what you want to do for the rest of it.
Yep.
It's a wonderful thing. You have absolute clarity that you're going to do something and you're going to achieve it or die trying. It's a fantastic, liberating feeling because you don't have to think about, okay, what do I do in 5 years? What do I do? It's like exactly what you're going to be doing.
So it's almost like your whole career you were kind of trying to find Bitcoin and found Bitcoin.
So yeah, it's kind of interesting. I stumbled upon Bitcoin early in 2010. And at the time, I found it, even by my standards, I consider myself to be very geeky. At the time, it was too geeky for me. And in truth, we all know this now. It's if you don't invest a lot of cycles to truly understanding Bitcoin, especially at a time where you didn't have a lot of use cases, you didn't have a lot of people to talk to, you couldn't really truly understand it. And so I kind of brushed it aside a little bit. And then in 2012, a very good friend of mine, Wences Cazares, insisted that I spent the time. And when Wences insists, he can be quite insistent and convincing. And so I spent the time really understanding it and running a node and running wallets of all sorts. And then I, immediately got very excited about it. And this was in the middle of me running PayPal. And I remember this time, I think it was in 2013, where Argentina asked PayPal to prevent Argentine customers of PayPal to moving balances outside of the country, capital controls. And I remember seeing the price of Bitcoin appreciate the same day, and almost an immediate reaction to it. And this was such a moment for me, understanding that people wanted their financial freedom that they absolutely deserve. If you work really hard and you make money for you and your family, it shouldn't be taken away from you arbitrarily. And I saw that happen, and the whole story of Wences and growing up in Argentina and seeing his family lose money several times, etc., really came to life for me at that time. And so I was really deep in Bitcoin from that time already, and then came back to it in a long, twisty way. But
You might not want to answer this, but is Zuck is he a Bitcoiner?
Yeah. He appreciates Bitcoin. But yeah, I think we had a lot of conversations about this.
Yeah.
Especially when I was struggling with seeing how we could decentralize this thing enough. We've had a lot of conversations, and the tension was between full decentralization and the reality of scalability, usability issues, and then the volatility that we would have to put people through to enable them to use a product. So it was, and then when you look at very good currencies like the dollar, and some will argue it's not, etc. But I think everyone in the world. I think we talked about your trip to Lebanon and other places where people what they want is to hold dollars.
Yep.
And when you have a good currency like the dollar, the volatility or the lack of volatility required for you to create a digital asset that can match it is very, very, very small. And so you can't, if in one day you have a plus 5% or minus 5% on the currency that you use as a unit of account for everyday purchases, it's a big problem.
I do want to ask about the Senate testimony here, and there's a reason I'm gonna get to it, but that was the first time I really heard who you were, knew who you were, because I don't look who runs companies, but I remember watching it. What was that like?
Not fun.
I mean, but was it nerve-wracking? Do you feel a huge amount of pressure?
Yeah, I mean, in a number of different ways. I mean, the first thing is I first took it as an honor to go and testify in front of both the Senate and the House. I'm an immigrant. I'm proud to be an American. I was brought into this very ornate room with marble in the back and the seal of the Senate, and I was like, okay, this is kind of it's a good moment as an American to have the privilege of being able to address the Senate and defend my project. And so that was kind of the first thought. The whole thing was very difficult, of course, because you have a lot of people, more in the House than in the Senate, but you have definitely many more people who are asking questions without really wanting to hear your answers.
Because they've already decided.
They've already decided.
Yeah.
And so it was very challenging, very long. The House one was, I think, 4 hours or more. So it's a long thing, but and then you have to also internalize the fact that you're not representing yourself or your own company. Mm-hmm. You're representing a very large company with a very large shareholder base, and all kinds of other companies that have decided to join you on a journey, that have trusted you on the basis of your personal relationship that you have with a lot of people. And so you're defending not only your own project, but the reputation of very successful companies that have decided to join you on a very difficult journey.
And the reason I ask is because you have decided to build this company with the only technology that can do the job of creating a neutral global asset. And even though sometimes I think we've gone too far for it now to be essentially banned, regulators can still make your life particularly difficult. And I'm assuming when you're raising money or you're explaining this to investors, you have to consider this, but you've gone for it anyway. And then, so therefore, based on your experience, the risk was obviously worth it. But is that something you think about, or do you think we're beyond that?
No, I mean, there's always risks.
Yeah.
And you have to internalize the risks and try to mitigate them as much as possible. I think if you're trying to do what I'm trying to do and many others are trying to do right now around this technology, you have to pick the asset and the platform that is the least likely to have these types of issues. And Bitcoin has more regulatory clarity than others, than any other crypto asset out there. It is widely accepted by a lot of regulated financial institutions. I mean, Fidelity has a Bitcoin-denominated 401k. There are a bunch of spot Bitcoin ETFs that are awaiting approval. Eventually, it'll happen.
Yeah.
And outside of the U.S., banks can touch Bitcoin and they want to really embrace the capabilities that Bitcoin bring to the table. So I think we're in a world where we're past the point of existential threat to Bitcoin. It's not completely off the table, but I feel like in the land of all of digital assets, ones you can create, ones that already exist, it is by far, and arguably maybe by an order of magnitude, better equipped to resist to all of these types of attacks and challenges.
And there are now pro-Bitcoin people within the Senate and the House.
Absolutely, yeah.
Actually, isn't the new speaker?
Yeah,
he's pro-Bitcoin.
Patrick McHenry.
Yeah,
very much so. Yes,
which I find fascinating that we do have these politicians who pro, but then it kind of makes sense because if you look at where they tend to be based, it tends to be places like Texas, and they tend to be pro. But okay, so I want to talk more about the company now. Then, so based on your experience of trying to establish what you wanted to do within Facebook, within Libra, and having met Liz back in 2018, and knowing the infrastructure wasn't ready, was this just the obvious company to create that you knew you could create? Probably the most important backbone part of the Lightning Network. Yeah,
I mean, and before I get to that, I think one important point, and you mentioned that there are people in the Senate, in the House, across a number of countries and jurisdictions that are Bitcoiners or believe in Bitcoin at least, or the value of Bitcoin being in existence and of use. It's such a wonderful thing to be building on top of an open standard that has people believing in it versus you having to be the grand preacher of something net new and trying to bring a lot of people to believe in it, to trust you, etc. It's a game changer. It's liberating in a way to build on top of Bitcoin, where you have millions of people who really believe in it. Some people would argue hundreds of millions of people, but at least tens of millions of people really, really believe in it. It's a very different atmosphere to build on, and it's. I was reminded of this. And we missed each other at Bitcoin Miami in April, but we do these dinners when we travel and we invite clients and partners, and you can see the belief and the fervor around the table when we are having those conversations around why Bitcoin. And so for us, it makes our job a lot easier than trying to build a new standard and compete with a bunch of other standards for the attention and belief of people.
Well, I found my my own personal conviction has been from traveling, and not that I think this Bitcoin fixes it meme works in every country. I mean, I there's lots of issues in countries like Lebanon, Argentina, and Venezuela, all these places I've traveled to, but it's because I've seen everything else so broken, so utterly broken in these countries, and I've seen the hardship and the difficulty that's put on people. That's what gives me my conviction is that there's a necessity for this.
Yes, and it's interesting because it serves a purpose of truly bringing native, neutral internet money to the world. And that in itself, despite the fact that it has volatility and all kinds of other issues, has so much value. The purity of having a truly neutral, native internet store of value is of incredible value, and it also serves as a check and balance. And that's also why a lot of people appreciate the fact that it exists, because if you have a great currency and you're running your country and your central bank in an appropriate way, then you're fine. But if you're not, you have an alternative. You have an escape valve, and that's a check and balance that I think is so incredibly helpful for the world and good for people. So very different a very different thing.
So Lightspark, what
Yes.
was it just so obvious to you that this is what you had to do?
Yes. Because once you have that unshakable conviction that Bitcoin is the only asset and network that you can build a truly open, interoperable, cheap, 24/7 real-time settlement payment protocol for the internet on, then that's it. So, and then you don't have much of a choice. It's like, okay, you want Bitcoin. Bitcoin on layer 1 is slow to move and expensive for everyday use and everyday transactions. So Lightning is the only solution that actually can scale with privacy and scalability and low cost. And so we embarked on this journey of helping Lightning become adopted in a more mainstream way and address a lot of the usability and operational overhead challenges of being on the Lightning network. And so that's what we've been focused on.
And so what are those issues?
So a channel-based payment system is fairly counterintuitive because people and companies are used to having an interface and being able to push a payment. And if you're trying to do that on Lightning, you first have to have liquidity locked up in channels, find out other nodes to connect to, lock up that liquidity so that they can reciprocate, and you have inbound liquidity that is set up for you so you can receive payments. Then every single time you have a payment that goes through your channels, they get unbalanced. You need to redeploy liquidity between channels and do all kinds of different things that are really not intuitive. And that require, even for large, sophisticated companies, teams of people managing nodes and doing these things. And also the tooling for Lightning is not that good. And so, for instance, route finding, when you're about to send a transaction for a specific amount, finding the appropriate route that is going to result in a success of your money arriving at its destination, and not failing, and not be the victim of crazy latency along the way, is also super important, especially when you're trying to compete with other payment systems that are high availability and used at levels that are way higher than what Lightning is used today. And so we built a lot of technology around this. Lightspark Connect is our node management system that enables you to spin up your own node. We don't have the keys. You own your keys. We can't move funds on your behalf. So it's your own node. And then Lightspark Predict is a software that runs across our entire infrastructure and gets a map of the entire Lightning network, where the liquidity is, how nodes are performing or not performing, the latency of each of these nodes, availability, uptime, et cetera. And then with this data set, we are able to find the best routes for every single transactions that are sent across our stack, but then also dynamically deploy liquidity across the entire network in such a way that our clients don't ever have to worry about liquidity on the network. They don't have to worry about channel rebalancing. They don't have to worry about finding nodes to connect to and open channels and close channels with. They have their funds available, whether they're in channels or on their L1 wallet, on their nodes. They can do all of these things seamlessly. And so we've built a way for exchanges and wallets to have an enterprise-grade entry point into Lightning where they plug in and they have their outbound liquidity in their node, and they have SDKs and APIs that they can embed in their own infrastructure, and then they can send and receive payments reliably, period. So we've removed all of the complexity from Lightning, basically.
And so when you've built Predict, you've built it in a way to find the liquidity and be able to find the most reliable ways to route payments. But are you finding the most reliable within the limitations of how much liquidity exists within the network, or are you able to even solve that? Are you able to add liquidity if it's required? You are.
So we do the latter. So when there is not enough liquidity, then we can dynamically, in real time, deploy liquidity across the network to ensure that transactions are going to be successful.
So in some ways, because we've always considered that Lightning is for smaller transactions, and I don't think I've ever sent more than $300-400 in a single transaction on Lightning Network, whereas on the base chain, I've sent much higher.
Right.
Have you essentially then removed the limitation on the size of individual transactions?
Yes, we have, and also what we can do is we can help our clients predict where they're going to have more volume over time and gradually build customized models for each and every one of our clients. So you can see, for instance, exchanges that have patterns with specific endpoints. And so we deploy liquidity and open specific channels with endpoints that are going to enable them to have unlimited transaction sizes with specific parties.
And is that literally unlimited? It can go as high as you want.
I mean, it could, in theory, as long as, one way for sure. The other way, it also will depend on who, is it a direct channel with someone, or is it a channel that has to go through a series of nodes, and in which case you'll have limitations. So it really depends. But we can configure, that's one of the beauties of Lightning, is that you can configure the network, your node, who your node is connected with, in a really customized way.
Yeah.
And so some players only want to open channels with specific players. Some players want to have as many channels as possible with as many nodes as possible, which is, by the way, not a recipe for success generally, because a lot of nodes that have liquidity are not performant or are not up when you need them to be. And there are all kinds of other parameters that will ensure that a transaction is successful on a specific route. And so we've dealt with a lot of that complexity. And as such, the interesting thing is when we talked to exchanges, neobanks that have Bitcoin, wallet providers, and that didn't have Lightning or weren't on the Lightning network, their main complaint was, first of all, is it worth us integrating? Is there enough activity to justify the engineering cycles? And then as part of that evaluation, they went down the rabbit hole of trying to figure out, what does it take for me to spin up a node, maintain the node, deploy the liquidity, open these channels, rebalance these channels, manage the updates and all of that stuff. And the answer has always been no, because it doesn't compute, right? The opportunity is unknown. And the cost in terms of deployment and operationalization of the thing is just, doesn't make sense. And so we've and it's kind of a chicken and egg, right? Because if no one does, then the network can't take off. And so you'll always be in this position where it's like, okay, it doesn't make sense for us to integrate. So we've at least addressed one part of that two-part puzzle, which is now it's really easy. You can do it really quickly, reliably. And so you can now offer this service to your clients, which is faster, cheaper Bitcoin movement. So that's kind of step one, make it really easy. Step two is, okay, now you have a lot of players. And so how do you create a great consumer experience so that consumers start using Lightning in a more seamless way? And so there are a number of problems that you need to resolve for that, that we're actively working on. So for instance, today, it's a two-player experience, right? You can't send money to someone randomly. They have to generate an invoice. They have to send you an invoice, and so it's this long string of text or a QR code that you need to capture, and then you can send a payment. So that's kind of not really great. So there are a number of different approaches to identity on top of Lightning that we're looking at and building on. And then,
is that LNURL, or are you doing it a different way?
Yeah, LNURL is actually really interesting in a number of ways. It's easy to implement. It's got a lot of good capabilities. There are other proposals that are even more decentralized that I think will come to life, in the next couple of years, that will be also interesting. But addressing is really important. And then you have another part of the problem, which is, okay, now you have addressing, you have all these exchanges. Do people actually want to transact in Bitcoin? Do they want to transact in other currencies? How do you make Bitcoin the net settlement asset between currencies? And I think, at the end of the day, if people can use good currencies that they already have, they already know, there's no cognitive load in you learning about the new currency and its volatility and where it's accepted, not accepted. But you can now send to anyone you want 24/7 cheaply and reliably, then people will want that. And so that's, all the next phases of what we're building are meant to address this.
So you solved the issue of liquidity, but does that get solved if both parties are using Lightspark?
No. So the way it works is that because of Predict, we're able to map routes. The vast majority of the Lightning Network is not, and that's not what we want as well, running on Lightspark stack, right? Otherwise, it's kind of defeating the purpose of decentralization. So we hope to have a decent market share, but other players are really required to do their job as well. And so, as far as sending goes, for sending transactions, we're always able to deploy liquidity along the route, only connect to nodes that are going to be high availability, good performance, have the right liquidity deployed within these channels so that we have good paths to the most common endpoints of the network. And so the vast majority of these endpoints are not on Lightspark stack. And there are all kinds of different endpoints, whether it's custodial wallets, non-custodial endpoints, et cetera. So we aim to enable our clients to send successfully across the entire network.
If the Lightning Network is built in such a way and it's so successful and all the large technical challenges are solved and you're able to move large amounts of Bitcoin around quickly, cheaply, is there a risk that it actually makes redundant the need to be using the base chain so much? And in a future where we're going to see the block subsidy reduced, we want base chain transactions and we want lots of them to ensure we have revenues for the miners. And I've asked this question. I've never really got a solid answer from that before. Is there a risk, or do you think there's always going to be a need for base chain?
Yes, there are always going to be a need for base chain. Without it, then the whole trust model collapses. And as we've discussed, it's really why Bitcoin is unique, is this trust model. So,
but could it take a significant amount from the base away from the base chain?
I think it'll take. So let me back up for a second. First of all, I think it's going to generate a tremendous amount of transaction volume that is currently definitely not on Bitcoin right now. If you look at the legacy payment rails out there, if you look at a correspondent banking network where you have most of the money settling between currencies and countries on a daily basis, except on weekends and after hours, that's $5 trillion a day. That's $5 to $6 trillion a day. So it's a tremendous amount of volume. And so when you think about an alternative between all of those new domestic real-time payment systems that are starting to pop up, you have Pix in Brazil, you have real-time payment systems in Mexico, you have real-time payment systems in Europe, in a lot of places. You have FedNow that is eventually going to become a thing in the US. And so what is the interoperability? Yeah, it'll happen. It's taking time. It'll happen. So when you think about how do you interoperate between all of these systems, the various currencies, the various addressing standards, like every bank account or Pix address, Pix ID looks very different than a SEPA IBAN thing. So once you solve for all of that and you start to have volume migrate, you're talking about a lot of volume. And so when you have a tremendous amount of volume on Bitcoin, it makes layer one a lot more valuable. And the fees you're going to be willing to pay for larger transactions, like very large transactions between institutions on layer one, are going to be much higher than what you currently pay. And the rest for smaller transactions is going to exist on Lightning for the vast majority. And when I say large transactions, I mean very large transactions.
So do you therefore see Bitcoin, rather than something that is there just to replace all the other payment rails or some Bitcoin a single hope, it maybe becomes the glue between systems?
That's the way we see the opportunity. We think that's where Bitcoin shines, because if you're trying to, so look at what's happening in a lot of countries. In India, you have UPI. In Brazil, you have Pix, immensely successful. Pix wasn't even a thing a few years ago, and now everyone is using it daily for transactions in a very efficient way. But the Brazilian government wants to export Pix. The Indian government wants to export UPI. We will want to export whatever form of system we want to export, et cetera. And no other country really wants another country's payment system.
Nope.
And so what is the most neutral thing that is maybe not going to be accepted with a band, and a welcoming committee, but is not going to be thrown up all over. And it's the thing that is neutral and that can do a really good job at moving value around the world, and that also happens to have the best liquidity profile of any neutral asset out there. So when you think about it, it's an ideal neutral internet settlement asset and network. Ideal.
And kind of perhaps by chance, in that I think there's a few things that I don't think Satoshi envisaged. I don't. Yeah, thanks, Dorian. I don't think he.
Poor guy. Seriously,
Yeah.
it's like,
Do you know? You were in Miami. He was at the conference in San Francisco in 2019.
seriously.
Yeah, he was just wandering around having photos
That's
taken.
so funny.
It was
I
hilarious.
didn't know that.
Yeah. So I don't think Satoshi envisaged Bitcoin miners integrating with ERCOT to help balance the grid. I think Satoshi was brilliant. I don't think Satoshi saw that. I think Satoshi foresaw this as just money on the internet. But it feels like, we talk about the unknown unknowns of Bitcoin being the most exciting. The grid integration for me is exciting. The miners who are going out to landfill sites and they're burning off methane and generating money and reducing methane in the atmosphere. Again, I think that's an unknown known. It's
Converting harmful substances into neutral internet magic money. Amazing, right?
Well, I also, when I made a documentary in Texas, and I went to one guy's house, he's heating his pool with Bitcoin miners.
Yeah, there you go.
Incredible. But it also feels like this system, which, you look at what Jack Mallers has done with Strike, and I'm assuming you're thinking similar, this system to act as that glue between nations. You've got bordering nations did that come up in our conversation the other day? Bordering nations, where was it we discussed that? There was bordering nations in Africa who can't do business with each other because they don't want each other's currency. But Bitcoin allows them to settle between each other.
Yeah, because you have the forward deployed liquidity of Bitcoin with exchanges that can trade in and out of different currencies really effectively, with Bitcoin being at the center of it. Yes.
And it feels like Bitcoin and I know some people won't like this because they want Bitcoin to replace and fix everything in the world and there'll be no other monies. But we know that's not going to be true, certainly not in the short term. But as this glue between all the financial systems, I feel like that's like another unknown that's come out of this.
Yeah, totally. And I think it's coming in view more clearly for me because also of the rise of real-time payment systems at the edges. Because if you have really good payment systems domestically that are using the country's national currency, which is what governments want, and I'm not suggesting we always need to do exactly this, but I feel like if you're going against governments for a thing that they care a lot about, which is controlling their own currencies and not delegating that power to private institutions or other players, I think I've experienced the downsides of doing that without fully realizing how much they cared about this, but now I do. You come to the conclusion that actually this is just perfect for it. It's the perfect fit between real-time payment systems that are developing everywhere in the world. It has the liquidity, it has the regulatory clarity, it has the proper decentralization, and it also serves in some cases, in some countries, as a good check and balance because your home currency is not managed appropriately and you have devaluation and massive inflation and you have no place to store your money except buying things and spending every penny you have every time you get a paycheck. And so it's a pretty remarkable thing when you think about it. And I agree with you. I don't think that this was foreseen. But the power of these incentives that have been coded in this algorithm are producing new miracles almost every couple of years. And this one would be a very significant one because if you have the ability to move money globally in real time, 24/7 at a low cost, and everyone is on the same network, irrespective of their country, their home currency, their home payment system, then I think you can unleash a ton of GDP for the world. I think that the world's GDP is constrained by the inefficacy and the crumbling state of our payment systems that were, for the most part, invented in the 60s and 70s. And so if you remove all of that inefficiency, if you enable money to travel globally the same way that you send an email or a text message, and if that value can get to its destination 6 months earlier, like if you're a YouTube creator and you're not on the long tail, you're at the top of the tail, but at the head. But if you're at the end of the tail and you get paid like $120 every 6 months, and you're not in the US, you'll get paid every 6 months. And so, what happens if you can actually get paid at the end of every video view, even if it's like 30 cents or 50 cents or $1, you're going to spend that dollar in your local economy much sooner. And so what is the downstream effect of that trickle effect of all of that money moving freely, like everything else on the internet does?
Well, so you solve some of the technical challenges of this crumbling old infrastructure, but there is still this legacy bureaucracy related to KYC that does exist. And I got no idea how much of a block that is. Just examples. I just signed up to based on we were looking on your website. I signed up to Zappa. I didn't realize what it's become since once they sold it, and I was like, oh, that looks interesting. Let's have a look at that. And I've signed up, and I have to provide my passport and all this information. I'm waiting to see it. Similarly, the other day, one of our sponsors wanted to pay us, and I gave my bank details. They're US based, I'm UK based, and they had trouble sending the money, and the address was wrong, or the phone number. In the end, he was just like, "Can I just send you Bitcoin?" And he did, but. We still have, I know. It was like, but we still, when you're trying to glue these systems together, is there any risk that you cannot control this network, that some people just won't allow it, or is it that they can't stop it?
So I think for us, the core target customer is one that is larger in size than the typical applications. And that's the beauty of also building on an open network. You have a number of others who are trying to cater to smaller players and different kinds of setup. We're going after large financial institution exchanges, wallets, and they have a customer base. And their customer base is already KYC, they're already onboarded. They've worked out the friction as much as possible for the vast majority of them. So if all of them come online on the network, and then other players are catering to other types of endpoints on the network and make those better as well, then you can start to send and receive value without friction on the network in a very seamless way. But the problem is today, a large majority of these players that have a lot of reach with consumers are not on Lightning.
Yeah.
And they don't enable you to send whatever currency you want on top of Lightning in real time. And so we have to fix that. And that's going to take a while, but we're very determined and patient. And so we're going to see it through.
Are you seeing any appetite from large companies who aren't native Bitcoin companies or native crypto companies?
Yeah. We're seeing a lot of traction in a number of regions from actual banks that have the ability to touch Bitcoin. We don't have that in the US right now under this current administration. If you're a bank, you can't touch Bitcoin. Some of them are doing it at very small and a very small sandboxed type of setup. But so yes, the banks themselves are a little frustrated with the correspondent banking system and SWIFT and all these things. They feel like it's inefficient, it's costly for them to operate and maintain. It has a lot of the compliance features that they're subject to built in, so you need to be able to serve them in the same way. But even the banks themselves are not very happy with the state of things.
So it feels like you, more than anyone I spoke to recently, really understands Bitcoin and its potential to a very deep level. You can see the future of what Bitcoin can do way beyond probably some of the ideas that people have. So do you feel like you're almost seeing into the matrix with this? You can fully see, and therefore, I mean, the question I'm really asking, you're like, how do all these other people not get this? How is everybody not thinking about this? Like, how are we at $28,000. Like, why is it? Do you just not understand that?
Well, yeah, I do understand it. I think that the reality is we've gone through so many cycles.
Yeah.
And so there are cycles where Bitcoin was going to take over the whole world and people went crazy and needed to own Bitcoin. And then there are times where Bitcoin won't do anything for anyone. It's slow, it's expensive, it's just not the thing. The next thing is the best thing, etc. So you've had all of these cycles, and in the meantime, we really haven't fixed consumer problems at scale with any of that tech. Like, there's a lot of talk, there's a lot of speculation, there's a bunch of technology that has been built. But when you think about end consumer impact at mass market scale, it hasn't happened with Bitcoin. It hasn't happened with the entire industry. Arguably, Bitcoin is faring better in terms of its neutral digital store of value, customer proposition. But by all means, compared to all the other internet era technologies, we're not at mass market scale. And I think one of the reason is that if you're ideological about it, and that's it, like that's your whole drive is ideology. All the currencies other than Bitcoin will die. We'll all use Bitcoin as our unit of account to pay for your coffee, which is always the example everyone uses for some reason, which is probably the last thing that will happen, by the way. But anyways, so if you take the dogmatic ideological approach, then you're not going to solve the real world problems that are in the way of mass market adoption. Because you're not going to want to build interoperability with existing payment rails. You're not going to want to build compliance services that enable regulated entities to be on the network. You're not going to do all of you're not going to do all of the things and build all of the capabilities and software and services, et cetera, to enable everyone to be on the network, because you think that the very participants that we're serving shouldn't even exist, right? And so when you have ideology rather than understanding both the value of the underlying core technology for what it is, you're very clear-eyed about the gaps that you need to go address. And at the same time, you understand how the rest of the world functions and the existing payment systems, the existing incentives that are built into these payment systems and the players working to build those experiences and serving billions of customers on the other side of it. If you don't understand both of these worlds, you can't build the right thing. And so I think that's what's been problematic.
But I don't think that will be a problem for much longer, because I feel like the ideology is a phase. But I feel like over the last few years, we've got much more serious players coming in, showing an interest. Whatever you think of BlackRock, they have an interest. We have Fidelity. We have David Marcus, who's coming and building products. And I feel like also in the work we do, the kind of people we're interviewing, we've got a lot of macro people coming in, philosophers coming in. It feels like the ideological stuff was more of a phase. I don't want to be rude to people, but it's like maturing out of it. But I also feel like if you are ideological, you can live on a Bitcoin standard. You can only use Bitcoin companies. You can only transact with companies that accept Bitcoin. All this other stuff can be built without damaging the core principles of Bitcoin.
Yeah, I agree.
Now, look, I can accept an argument about a BlackRock having an ETF that is centralized in parts of Bitcoin, but you can choose not to buy that.
First of all, ideology, I'm not like saying that ideology is a bad thing. I was just responding to your question about why we haven't seen this come together until now. And I think that if you're too ideological and you don't see the world as it is, you can't build for the world as it is. And so then you're like, okay, I'm going to wait for 30 years for this thing to eventually happen because it's meant to happen. And I agree that the value of ideology in terms of believing that this is truly neutral internet money, which is my ideology. I actually really believe that there will not be another form of neutral global internet money that comes close to Bitcoin ever. So that's my ideology. And then it's like, okay, what's the technology capable of doing? What do we need to build? But for BlackRock to come in and issue a spot Bitcoin ETF, you shouldn't be opposed to that. It's going to enable millions more people to own Bitcoin, care about Bitcoin, and it's going to strengthen the value of the network. If more people care about it, if more people own it, then the network is much stronger, much more resilient.
Do they actually own it though? I think that's a fair question. Do they actually own it?
But would they care about it? They would own a piece of it. They'll care about the value. They'll look at the price every day. Would they care about it? They would.
I would push back on that. You were going to.
Yeah, I would definitely push back on that because I think they have exposure, and sure, hopefully, like they then decide to learn about Bitcoin. But I think there's a very big difference between what BlackRock and a spot ETF does compared to what your business is doing. Like you're actually building on Bitcoin, and that's like a rising tide lift all boat, right? Mm-hmm. And like you're adding to the network and like enabling this kind of like freedom money, internet money to proliferate to more people. BlackRock are not doing that.
And just to add to that, I also think BlackRock might create martyrs in that BlackRock doing this can expand the reach of Bitcoin, awareness, understanding, but at the same time create a bunch of Bitcoiners who have an IOU who may end up becoming martyrs if something happens to the Bitcoin that they custody or something happens to BlackRock themselves, which I think is low risk, but not zero.
Yeah, I think, look, I mean, they're custodying trillions of dollars of assets, so I think they'll be fine. But
it depends if they try and play like the fiat games with Bitcoin, because we've seen what happens when people do that.
Yeah, I think, so for me, here's my ideology. I think my ideology on this is Bitcoin is an open network. People have the choice. And this is the value. The choice is the value. You can decide to have a hardware wallet buried in your backyard if that's your thing. You can decide to use Coinbase because you're fine with an exchange custodying your value. You can do a self-custodial wallet on your phone, or you can own Bitcoin indirectly via an ETF whenever that becomes approved. And that's the beauty of an open network. People can choose. And by the way, they can get on to the network indirectly at first, learn about it, and then decide they want to own it directly. But is it a good thing for Bitcoin that very large financial institutions that have a tremendous amount of reach with consumers start talking about it, promoting the product? People will learn about it, will onboard onto the network indirectly. Some of them will end up owning Bitcoin directly because they've been onboarded indirectly at first. And arguably, I mean, the same argument was made many, many times for centralized exchanges, which is like, no, this is like, what are you doing? Like, you're custodying people's coins. This is like, not the way it was meant to be done, and people need to self-custody, etc. But do we think that more people are now using digital assets in general and Bitcoin because Coinbase did what they did in building a really good consumer experience and marketed to people so they could actually onboard? Absolutely, undeniably. Mm-hmm. So they advanced the market. And I think the same argument will apply to ETFs, although it's 1 degree further removed. I get that point. Mm-hmm. But I think educating people more and more about the network, having more people caring, more people owning, will strengthen the network. And I think that's value.
And I think it's inevitable more than anything. Like, well, we're obviously, no one's going to stop this now. But the one thing that it does do is if you buy the BlackRock ETF or whichever ETF gets approved, you're getting exposure to Bitcoin, and then having to, if you ever do want to come into like the real Bitcoin world, you have to sell that Bitcoin, pay tax, and then try and like, so it's not a direct comparison to Coinbase, I would say, but I do understand the analogy.
No, I completely agree.
Yeah.
Do you have to sell the ETF? I thought you can.
You have to be a qualified custodian. So that would be like the Fidelities of the world. It won't be people.
Yeah. Okay. Yeah. Fair enough.
That's the BlackRock ETF. Others will be different. But
yeah. One question I've asked a few people, I've never got a good answer for. But if we're going to expand Bitcoin to tens of millions, hundreds of millions, hopefully billions of people, you've got experience of scaling for billions. Not everyone's going to have a UTXO. Mm-hmm. That we understand, that we accept. Most people end up, most of their experience will be on the Lightning Network. But can you be self-sovereign on the Lightning Network? Because you're essentially using somebody else's UTXO.
Yeah, I think scaling issues, if we're talking about scaling to hundreds of millions, billions of people, are going to be real. And even before you get to the UTXO problem, you're going to run out, and I don't know how much you want to geek out on this, but you're going to run out of HTLCs, and so you can't actually open channels, right? You run out of your ability to open new channels.
Why do you run out HTLCs?
Because you just won't have enough space in blocks and not enough blocks to open. Like the velocity of new channel opens is just going to outpace the capacity of the network. And then what do you do? And so people are worried about this. I'm actively worried about this because we're building a business and a solution that we think is important for the world that will depend on the ability of Bitcoin to scale. But I think that the reality is there are ways of scaling L1 to support, more UTXOs, more channels, and have more capacity. And I think the problem is right now, there's not for the core developers a really good reason, a compelling reason to work really aggressively towards that because the volumes are what they are. And yeah, we had this moment when we had ordinals like blowing up L1 where the network was heavily congested, fees went through the roof, which was good for Lightning and challenging in other ways as well because when your channel opens are very expensive, it's a whole other problem. But that faded kind of away. Like we're not in this crisis mode of L1 being so congested and the mempool not being able to keep up. So there's no compelling reasons for the core devs to want to add a few opcodes that would enable you to do things that would scale Bitcoin really well. But I think that once we're faced with that and it becomes an existential threat, actually the network is doing what the original white paper has set out to do, which is peer-to-peer payments at scale for the world, for everyone, for hundreds of millions of people. You're on that trajectory. It's about to happen. And you need to add one or two opcodes to enable you to actually scale the thing. And you're going to be, no, I don't like it. We're not doing it. We're just going to let this thing die. I don't see it. I think that we're going to get to a point where we're going to drive a ton more volume. And we're going to get Lightning in a place where it starts to get adoption. And then we'll have very good, substantial conversations with the core devs on what are the most practical ways to scale L1 to support the kind of volume that's coming. And then we'll do it, and then we'll be fine.
It is quite interesting. I find it fascinating that the pace of Bitcoin scaling seems to be in a kind of dance with the pace of Bitcoin adoption, and that it would actually wouldn't be good for Bitcoin to have mass adoption very quickly, to suddenly expand to 2 billion people having it. We would have issues, as you said. And we do have an issue with trying, lots of people out there want billions of people just suddenly be on Bitcoin because they think it's going to make them rich, but it wouldn't be good for Bitcoin. So this kind of pace of adoption and pace of scaling seems to be in this kind of dance that's almost happening at the right time, at the right pace.
It's unbelievable, truly, when you come to look at the way that Bitcoin became what it is today and the journey.
Yeah.
To see how many things are happening in the right sequence for it to become the thing that it ought to become in X number of years, reaching its fullest potential, et cetera. It's truly awe-inspiring and fascinating when you think about it. And even like 2 years ago, the whole thing was about climate change and about this is using more power than a country, et cetera. And now it's now even for the people who are ESG people, they're saying actually Bitcoin now is a solution to the climate crisis. And this is how we're going to convert bad things into good things, regulate our grids, fund renewable energy plants that can't be connected to the grid in 10 years, do all kinds of different things. And so it's fascinating to see how many gates this protocol is clearing, and how it gets to adoption and solving problems and having different kinds of people working on it. It's truly fascinating.
There was, I think it was maybe MVK earlier, shared a tweet from 2017 from the World Economic Forum that said, we predict I think it may have been by 2022, Bitcoin will use all the world's energy.
Yeah.
Wasn't that, it was in the past, I think it was like 2019 or something.
Was it that?
Yeah, it wasn't that long ago.
Yeah. The other issue we have with scaling the adoption of Bitcoin as a payment is the volatility. You mentioned it earlier, you said we can get into that. So where are your thoughts of that?
So if you as a consumer are using your home currency and then you want to send to another country and Bitcoin is the net settlement asset between those two currencies, and you're pushing that Bitcoin in a cash final way on Lightning, that transaction happens in, say, a second. And so the only volatility risk that you have is that second. And so you can price that in. There's a lot of volatility at the edges of the network. It's actually very cost effective to move between one currency and another currency using Bitcoin as a neutral, interchange type of asset. And so I think that problem is going to be resolved that way. And then there are also really interesting things around bringing stablecoins on top of Lightning, which I think will become a thing in the next couple of years. And I like this idea of having stablecoins serve the purpose of, if you're transacting on Lightning in the same currency, then you don't need to exchange from dollar to Bitcoin back to dollar. You can use a stablecoin. But the whole network doesn't depend on one stablecoin that has a central reserve. It's you can use it if you want, but you don't have to. And the network still runs fine. And I think that's the beauty of Lightning and Taproot assets. Number of other approaches are being looked into to bring stablecoins on top of Lightning that would address that problem as well. So I'm pretty confident that within the next couple of years we'll see that resolved.
You raised a shit ton of money. Let's be honest. I don't know how many companies within a Bitcoin space raises that amount in their first round. 175 million.
Yes,
but obviously you have an experience of scaling companies and credibility to do that. But at the same time, then you've done that at a very high valuation. 875 million, I believe, was the valuation.
I don't know that we've talked about that, but
I found it on the internet.
Like that.
Yeah, something like that. But I mean, that's what I found on the internet. So, but that said, the truth is you've got to create a company worth that amount of money, and hopefully more, and continue to grow. And we wish you all the success with that. But how do you make money? Are you essentially taking a small part of every transaction that goes through?
On our stack, yes. Yeah, we provide services. We provide liquidity for our clients. We provide all of these services that make Lightning magically work out of the box for them. And so for all of these services, we charge a very small fee per transaction API call, et cetera. So, and so it's a pretty binary outcome when I come to think about this. And of course, when you're building and you have a lot of stakeholders, you have to build a successful company over time. And the way I think about things is this is a fairly binary outcome. We're either going to be massively successful and the company is going to be worth a lot because we're going to enable so many different endpoints to transact with one another at a very large scale, or we're not. And, we have the means of our ambitions. We have what I think is one of the most, if not the most talented team out there to go build. And I feel confident we're going to make it happen or die trying, but, we're going to push hard and make it happen.
I was asking for a reason because it was leading to a question. Because you essentially get paid in Bitcoin.
Well, I mean, virtually and indirectly, yes.
Yeah.
Yes.
And so is there any part of your company that will retain your payments in Bitcoin or parts of it in Bitcoin, pay staff in Bitcoin? Like, how do you balance that idea of being a Bitcoin company? There's a reality of there's a fiat world that people have to live on fiat, but sometimes we transition to more Bitcoin. How do you balance that? I mean, we're a podcast, right? We generate money through sponsorships, but we retain but everybody pays us in Bitcoin. We keep that in Bitcoin and just put that away. Same with my football club. Both are less than 10, 20%, and we do that. And if we can pay people in Bitcoin, we do. And if people want Bitcoin, so we're part and part as well. But it's a small amount. What's the plans for your company with that?
So we need liquidity in Bitcoin because we need forward deployed liquidity across the Lightning network for our customers. And so we retain a balance, and that's the way we see it. We don't see ourselves as speculating on behalf of our investors and our partners on top of Bitcoin. So the vast majority of the Bitcoin we own on balance sheet is actually deployed or is planned to be deployed. And so sometimes we do, we're opportunistically building our balance because we know volume is coming. And, so that's the way we're thinking about things. I feel like, if you're if you're a venture investor, you can buy Bitcoin yourself.
Of course.
And so you don't want to pay a company a very high premium for them to buy Bitcoin, and you only have a small fraction of that. It's like that's kind of a bad outcome for you as an investor. But at the same time, we want to be opportunistic in the way that we build our treasury so that we can serve incoming clients and incoming volume and have the right liquidity at the right time on the network.
There may, though, come a time with a massive increase in liquidity that the volatility goes, and we have a much more steady Bitcoin, and most people have a choice of holding Bitcoin or holding a sovereign currency that has a certain amount of inflation with it. So you never know.
Yeah.
You might be speculating holding dollars. That's what some Bitcoiners will say.
Look, it's... I think over time, the reality of how Bitcoin is perceived, how it's used, its purpose in the world is going to evolve in a really good, positive way, and hopefully we can contribute to that to the extent we can.
When did you close your round?
It was, I think, in May of last year, if I'm not mistaken.
Right. So you were raising through like a horrible market. So you obviously, hopefully, the next couple of years are going to be pretty good for Bitcoin. But I imagine you've got a few more raises planned. Do you worry about like the Bitcoin market cycles affecting that?
I mean, so let me unpack this in a number of different ways. So first of all, no, we're not planning to raise. Maybe we'll never need to raise again, which is a nice thing when you can focus on building. You have the means of your ambition. You can hire remarkable people that join your team. So that's the way we're operating. If we need to raise in the future, I think it'll be a factor of our ability to demonstrate that we can build products on top of this technology that solve real world problems, that get adoption, where you can see the flywheel going. And then, it should be fairly easy if we can do that, because the problems are so big out there that we can resolve with this technology. If you build the right thing, if you deploy it the right way, if you get the right adoption, that I think, we'll be fine in that configuration.
Raise once, raise big.
I mean, the way it happened was not really by design in an odd way. But it turns out that when you don't necessarily have to fundraise are the moments where you can fundraise the most in the most optimized way. And so we're very lucky to have investors who believe in this for the long run and believe in the utility that we can bring to the world, and they've been amazing to work with. So I have no complaints. It's been great.
I could probably sit here for hours and talk to you. I think fascinating, but I know your time's precious. I probably just maybe want to see you again in another year and do this again.
Yeah,
and
that'd be
just
great.
Get an update and find out what's happening. It sounds incredible, and I think it's a real asset to have someone with your experience across a variety of significant global companies to be involved in Bitcoin and give some credibility. I mean, there's people you can knock on the door to and explain to them Bitcoin, and they're going to listen to you where they maybe wouldn't other people. So, look, I wish you all the success. I think it's amazing, and thank you for doing this. It's been great to talk to you. I guess we will just send people to the Lightspark website.
Yes.
Anything else?
No, I think be tuned in for all kinds of different things that we're going to continue rolling out, this year and next. And it'd be great to do that again next year and check in on the progress.
Awesome. Well, look, appreciate it.
Thank you so much.
Thank you.